Hey everyone, it is Evan here from the Trade Risk on Friday, October 18th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we had a busy week. We had earnings season officially sort of kick off this week with a lot of the mega cap banks reporting and lots of other companies starting to report over this week and the next coming weeks. Markets overall did finish higher on the week, although Friday we definitely gave a little bit back, put a little hesitation in sort of the bull case into the weekend. You can see major indices were down upwards of 1% here on Friday, led by the NASDAQ and the Dow. The 5-day change numbers mostly positive. The IWM is standing out here, up 1.62%. And we can see the major indices versus their 1050, 200 SMA. We are above all of them right across the board. If we scroll down a bit, take a look at sectors this week. It was transports at the top of the list, followed by healthcare and biotech. And on the downside, it was energy, it was tech, and it was staples. In terms of major markets, natural gas had a great week, followed by SPY and emerging markets. So it's pretty slim pickings out there. You can see these percentage moves not too high to get in the top three this week. On the downside, the dollar, oil, and volatility. So let's jump into the charts here and take a look of what went on here. We're going to start with the S&P 500. This is a weekly time frame. This is the cash market. You can see that we did again finish higher on the week by about 72 basis points here for the S&P 500. Notice the tail here on the top end. This basically happened across the board where we essentially, although not for the Russell, let me see here. Yeah, the Russell managed to take out last week's highs or rally above last week's highs. But in the S&P 500, you can see we tried to push up over last week's highs and we ended up kind of rejecting and pulling back a bit on Friday. Same thing with the Qs. We tried to make a move to the upside, a stronger move to the upside intra-week. We ended up giving it back and then falling below last week's highs as well. And the Dow Jones, same exact thing. You can see even greater tail here, looking more like sort of a gravestone there for the Dow. Now, if we get back to the S&P 500, though, we did finish positive. Last week, we talked about, the fact that we really needed to see some follow through in this market, or that would be the ideal case, is to get some follow through over and continuing from this week's kind of, again, this back-to-back sort of reversal. Notice the compression in range here. 2 weeks ago, the S&P 500 had this really wide range, almost 4.5% or so from high to low, and we ended up, pulling off of the highs and closing much closer to pulling off the lows, closing much closer to the highs than we did the lows. And then again, that big range. The following week, again, we had a fairly wide range, but it was certainly contained within the prior week's range. And we did again close at the upper end of that range. Now this week here, the range is compressed even more. And now we're trying to continue higher here and trying to get some momentum intact here for the bull case. So when we look ahead, we're basically, looking at about 2950 to the prior all-time highs at 3,028. That's the level above us, which again, from where we closed on Friday, is only about 1.25% away of a rally needed in the S&P 500 before we start making all-time highs. So we're really close to those highs, but you can certainly see that we're still kind of trapped here, kind of going sideways, don't have any strong trend that's been in place here on this more intermediate term, longer term time frame. Certainly it's been a tremendous year from the lows, but now we've been kind of stagnating here for the past 4 or 5 months. It'll be interesting to see if we can get some traction here into the year end. So going forward at looking at the S&P 500, 2950 or so, I'd say that's again that ballpark level that we want to stay above if we are going to keep momentum, if we're going to keep the bull case alive here. We want to stay above that level. If we start to give that up and we start to fall back into this old summer range here, that definitely throws a bit of a wrench here into this uptrend or into this potential kind of year-end nice rally. So that's the S&P 500. The bright spot this week, though, is really the IWM. You can see the IWM if I go to a weekly chart and maybe switch over to this view here. Again, the IWM structurally has gone nowhere for over a year time now, just going totally sideways in between, call it 144 to 160, 145 to 160. We're in the middle of that range now, but notice that we did close much closer to the highs here in the Russell 2000. We took out last week's highs, and we did finish up 1.62%. So there was definitely a little bit of strength there on a relative outperformance basis for the Russell 2000. Volume overall was pretty light. Again, we're still in a fairly trendless phase, but it's interesting to see kind of the step up here, and it'll be, interesting once again to see if we just take another trip back up to the top end of this range. We've been repeatedly kind of hitting our head against this 158 level at the top end of the range. If we start to break out from there, then of course, it seems like we'd have a good kind of risk-on rally, but we're several steps, several moves away from that happening at this time. Last but not least, if we look at the NASDAQ 100 here, you can see also tried to push higher today, tried to almost get up and almost retest prior all-time highs, but we ended up kind of rejecting mostly all on Friday's session. You can see kind of pulling back here and falling back on Friday, falling 1% on the session. We do have this open gap here from last Friday in the Qs, which is kind of glaring here. Maybe the market's got business to sort of retest that and see if that will hold. Really, you could make the case there for all the major indices. The S&P 500, that's down around 295 or so. So if we are going to come back and fill some of these gaps, there are open gaps up there from just a week ago time. We can keep that in mind as well if we are going to think that this market has a little more kind of downside probing before it starts to, or before it attempts to, set sails for the upside. So that's it. Basically, earnings season kicked off this week. It was a choppy week out there for the most part. It was progress to the upside, but certainly Friday gave us some hesitation. Software stocks and some of the high growth tech names, which we'll talk about later in the video in the sector analysis, they got hit pretty good on Friday. Again, a sort of another wave of selling introduced there in some of those growth names. Meanwhile, you had financials that were holding up after reporting the bulk of their earnings from some of the mega cap names, but we'll talk about that in just a moment. So before we do, though, let's take a look at some of the other major markets out there. The TLT, long treasury bonds here, you can see was lower this week, holding on to last week's lows. This has been fairly trendless now for the past 2 months or so. It had a tremendous first half of the year. It's been mostly consolidating recently now. If I go down to a daily chart, you can see getting pretty tight here, but really no trend to speak of. So this here just needs more time to sort of settle in, and it is doing some pretty healthy consolidation at this point. It might just need a couple more weeks, maybe even a couple more months of that consolidation before it really starts to set sail again and start to make a move. If we look at gold, this is basically in a very similar situation here. It's sideways, it's trendless here. It's been that way for the past 2 months. This also had a tremendous first half move for gold. So a little bit of sideways digestion through time here. Perfectly reasonable, perfectly healthy. Just might need a little bit more to settle in here before it can start to move. If we look at silver next, also a little bit of a different, this was more of a late kind of bloomer here. This really ignited into August, into the summer months. Is when silver really started to, could even be some type of blow off here, yet to be seen if that's true or not, but it is also in its consolidation phase here. You can see lower highs, maybe even a bit of a wedge here kind of developing, but it's kind of getting sideways and tight around the 16 and a half level. So we'll see if this can continue to stabilize here. Volume, starting to slow down a little bit after the surge again from August, September. So silver pretty much consolidating there. If we go to energy next and we take a look at oil, crude oil here on the week was down 1.75%. Really didn't change the picture here. Is an inside week. It's back-to-back inside weeks for oil. So for anybody who wants to trade this, who's looking at this, we have this nice kind of tightening pattern here when you have basically week after week compression in range and it's just overlapping price action. We can look for some type of breakout, some volatility expansion out of this move. and we would be basically looking at, well, it depends how tight you want to keep things, but below 11 or over 1140 seem to be the kind of upper level, lower level bounds you could use. And if we start to make a move there, then that might set the direction for the next coming days or weeks. For USO, the bigger picture is still sideways. We've been finding support around 1070, 1060 or so. It's been holding for most of this year since reclaiming it back in early February. So be interesting to see if that can continue to hold here for USO. Don't have too much of an opinion on it other than that. I mean, it is tight here. It is at the lower end of a range. So ideally it'd be a interesting breakout candidate in either direction at this point. So I think it's worth watching, and it'll be on my watch list for the first time in quite a while in the coming weeks. Last but not least, if we look at natural gas here, you can see heavy volume coming in over the past 3 weeks here. So it looks like it's trying to carve out some type of higher low potentially. If the ultimate low was in August here, it had this nice rally off of those lows from August. It moved all the way up to $23. A fairly deep retracement, about 60-65% of that move, which is a little bit steep. But notice the volume coming in, and notice the attempt here to try and hold and try and lift up here. So this is got some potential for natural gas. It's a very volatile instrument. This thing really gets moving once it starts to trend. So you got to be careful here, but it does look like there's some interest, like there's some volume here. And again, I think this is something worth paying attention to. Both commodities, I think oil and natural gas, getting a little more interesting, and it certainly has my attention over these next couple of weeks. So in fact, natural gas I'll be looking at for even as early as Monday. I have to look at this a little bit closer for potential trade entries. So that's it for major markets. Let's jump over to sectors. If we look at the top performing, worst performing sectors this week, it was biotech at the top of the list here. You can see up 2% on the week. Nice strong week for biotech. It had a pretty difficult mid-September. This was down 6% here, kind of breaking the support level. It's been, if we look on a yearly basis, let's see how it is faring on the year. It's only up 6%. And so, yes, it is positive. This is still pretty low in terms of other sectors out there. So for 2019, it's up 6%. 2% of that came just from this week. So it has been a laggard here for much of this year, as it's been kind of trendless and just grinding lower after the initial pop in January and February. It did just reclaim a pretty significant support level, so it'll be interesting to see if it can start to hold here, maybe act a little better. Volumes come in here, so a little bit of something to get excited about for IBB, but it still has more to prove in the bigger picture. XLV was the second best performer this week, 2% as well to the upside. This here structurally just looks a lot better. Take a look here when we zoom out at this pattern here. It almost looks like it's been stewing and is really starting to look like it wants to make a move here and start to resolve some of this chop that it's been in for the past year and a half or so. XLV again still has more to prove, really just working back to the upper end of the range, but poised a little better there than the IBB outright. XBI, we'll skip that just because it's basically biotech again, looking at all the same kind of thing there. XLF was, technically number 4 here on the top performers, but what's notable here is that financials, the bulk of the big mega cap banks reported earnings this week, and the market did take it in stride and seemed to react pretty favorably, up 1.66%. The XLF outright still hasn't quite broke out yet, but if it starts to get some continuation over 2850 or so, this looks pretty good here for really a good kind of rotational risk on for financials. We'll see if that can actually happen, but for now, a good start for them. On the downside, it was energy. Energy here on the week losing 1.5%. This has really been a dog this year as well. If we look at its yearly performance, especially as we get closer to year end, we're negative here in XLE. So we just moved negative this week. The yearly candle looks pretty Looks pretty pessimistic there as well. So it doesn't really, bode too well. There's a little bit of momentum divergence brewing here on the daily chart. So maybe there's some life to come here. Maybe it can try to put in some type of higher low and start to work up. But it's been a pretty tough performer there for most of this year. Technology was the second worst performer this week, down 0.81%. Structurally, this one here still looks pretty good. This was an early gap fill, so maybe this has got some indication here of what's to come in some of the major indices. This was a leading, kind of breakout index just last week as it started to move up, or earlier this week, I should say, on Tuesday. It attempted to kind of break out to new all-time highs, but then it got fairly, quickly rejected. It came back, filled the gap. Volume was light on it. We still have a positive divergence. So for me, this dip looks like more potentially opportunity than risk at this time. That certainly could change with more selling, more follow through to the downside. But right now, XLK still looks pretty strong. And semiconductors here also in a pretty strong, disposition, minus 0.27% on the week. It was the underperformer, but this recently did break out. It's kind of coming in here and filling this gap. Positive momentum right now on the MACD anyway. So SMH, XLK, the tech side there, at this point still are still holding their uptrends, still in an overall sort of leadership role until proven otherwise. If we get another week of selling, if they're underperforming again for a second, third week in a row, then we have maybe some issues there. But for now, we'll give them the benefit of the doubt and just working off some of those, stretched overbought conditions. So that's it. That's what I got for this week on the market recap. Remember, earnings season is here, so double check all your earnings dates before you're entering into trades and all of those existing holdings as well. So thank you, as always, for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great rest of your weekend, or a great start to your weekend, and we'll see you back here on Tuesday for the midweek video.